Everybody, I'm going to say what's up in the chat. I'm going to show you guys something pretty interesting. I think this could kind of get housing in a very unique scenario in which normally right now we look at the housing market, it's out of control in most markets. Well, now they are considering down payment assistance, essentially free money to buy real estate. They're also considering a whole another year of stimulus. So another year of stimulus, and they're considering this free down payment money. It's going to be very interesting. So I'm going to tell you guys what I'm seeing here. You guys let me know what you guys think about this and how this is going to impact the economy, inflation, real estate, everything. So take a look at this. Hey, what's up, Jay? Take a look at this. So stimulus checks, this program could get certain people up to $17,500 for free. You think about how long it takes most people to save $17,000. If you're making $5,000 or $6,000 a month, which is a pretty good salary, and you're renting an apartment for $1,500, you have health insurance, you have a cell phone bill and food and gas and car insurance, you're lucky to save maybe $1,000 a month. So this might take somebody, and that doesn't even factor in for taxes, it might take someone nearly 2 years to save that kind of money. And now they're going to be proposing to give $17,500 for free. Inflation is a hot topic right now thanks to broad increases in prices for everything from food, gas, home staples that we're seeing right now. In fact, inflation at a 31-year high in October, causing all sorts of knock-on effects. Like to cite one example, Dollar Tree announcing that almost everything on its shelves will cost more than $1 going forward permanently. Almost 80% of Americans say that inflation is affecting them personally at the moment and blame Biden. 57% blame Biden. The housing market, as you can imagine, is also not immune to this. The S&P Core Logic Case-Shiller indices reveals that home prices were up 19.9% year over year. For context, housing appreciates about 3% per year. So you're talking, six years worth of inflation inside 1 year. In light of that, here's one way potential home buyers can get help with down payment costs and other expenses. Bank of America is offering 2 home grant programs aimed at borrowers with modest incomes. The 2 programs are home payment programs and a down payment program, both of which are available in around 260 cities and counties. Neither program requires repayment from the borrower, and the bank says it helped almost 30,000 people buy homes with these programs. The down payment program offers a grant equal to 3% of the home price, so you can get an FHA loan up to $10,000. Among the important caveats to know, according to the bank's website, borrower must purchase a home in certain geographical areas. Maximum income and loan amounts limits apply. And since this is a grant that you don't have to repay, it might trigger a tax issue. A Form 1099 MISC will be issued. So the bank encourages borrower to consult with their tax advisor. So they may get a tax bill. We'll see. The other program here is BOA's America's Home Grant Program. It offers credit up to $7,500, which the bank says can go towards non-recurring closing costs like title insurance and recording fees, or to permanently buy down an interest rate. And these funds don't have to be repaid either. According to the housing market, Realtor.com analysis, monthly mortgage payments for a median price home are up $160 to 1 year ago. The Bank of America program support the bank's commitment announced earlier this year of $15 billion through 2025 that's meant to help more than 60,000 individuals and families buy homes. 60,000, that is a huge number. You might have heard some horror stories about the housing market right now involving a frenzy to buy that manifests itself in multiple offers, some offers in cash, investors crowding out individual buyers, and much more. The good news, Redfin is predicting that the frothy, overheated market will simmer down a great deal by the end of next year, allowing hopefully more normal and even first-time home buyers to get in on the action. And now what they're doing with stimulus, what they're considering right now, is borrowers will certainly have more money to put towards things like a new home cost if Biden and Democrats get their way. Next month, the Senate is expected to take final action on legislation that would extend the payments of stimulus checks for 1 more year. Another year of stimulus. Now, when we look at what's happening all across the world, what we're seeing in many countries is that low interest rates and stimulus are fueling inflation. We're seeing it here in America. But another year of stimulus, these low interest rates, if this is not kept under control, we are going to be stepping into a massive, massive problem. We already are stepping into a big problem, but it seems like this just is building up like a tsunami. The checks are child tax credit payments that are going out monthly. Right now, the last of these checks arrives December 15th. The new legislation proposed extending the monthly child tax credits for 12 more months. As a result, it's like that December 15th payments won't actually be the last ones. So it's pretty fascinating right now, because what I was seeing in the housing market is, we're seeing rising costs across the board. I don't understand how this is being enabled, really. We look at 2008, 2009, that market, we've far surpassed that market. But incomes are not rising at the same rate of inflation. We're having the great resignation where we're losing about 3% of our workforce every single month, and that number seems to only be growing. Outsourcing of jobs and talent. How are we going to continue with this housing market? I worry more so from the fact of the people that really can't afford to buy right now, that are extending themselves through these grants and programs. Last thing I want to see is people that, if you can't afford the down payment, running out there overpaying for a property and then, putting themselves in harm's way. One of the good things about the down payment of a home, I'm a big believer, and if you could buy something with 20% down, that's better than 3.5% down, because it shows that you have reserves and savings. When you are taking out a down payment potentially from like a Bank of America or through Big Brother, you take out the down payment through them, and there's very little reserves, there's very little security. Then what happens to these borrowers, to these property owners? Then when you have 60,000 people that are essentially getting free down payment money, my fear is that it pumps up the housing market even more, especially in those pockets, and it builds a huge bubble. Also, when we're talking about another 1 year of stimulus, that to me that's going to fuel people to consider quitting their jobs more. It's going to build out more insecurity in the workforce. It's going to be harder for people probably to, small mom and pop businesses to find talent that are going to stick around and stay. When people are, they're getting consistent checks and they don't have the pressure to make good on their bills, because they're going to make good on them either way if they're getting monthly stimulus checks. It just makes me wonder, like, how logically does this function organically long term, or are we stepping into a situation where this is just simply unsustainable? That's the big question I ask. We need, I believe, a economy that economies only work if people work. And right now they're being incentivized, society as a whole kind of is being incentivized to not have that same hustle, that same drive. If you're getting those monthly checks, it's pretty enticing to say, hey, you know what, maybe I'm not going to show up. Maybe I'm not going to show up to work. Maybe I'm just going to try to find a better job, a different job. And there's going to be some real, I think, hiring challenges for small mom and pop businesses going forward. And this housing market that's already absolutely crazy. It is so competitive. It is out of control. And when we're just throwing more gas on that fire, you got to ask, is this really something that's going to be able to, to really stand on its own feet? Or are we simply building out a 2008 on steroids, really? What do you guys think about this? What's up, Johnny? First-time buyers need no down payment. It's been that way for 10 years. Yeah, but it's a little bit different now, is that now with this down payment assistance, it's really the free down payment money. Before, it was never just a free down payment. You still had to put money down. Generally it was like a 3.5% FHA, but you still had to qualify for the payments. Now it's going to be a little bit different, I think. I think they're going to relax lending standards possibly, and the stimulus is also going to allow people to show more income than they otherwise would. And it's going to help people qualify for these loans based upon the additional stimulus that people are receiving. Let's see here. Eventually, they're going to foreclose. It's a possibility. Situational awareness, the only thing stimulated right now. Their goal to collapse the economy. For specific geographical areas. Yeah, they picked 260 cities and counties. So I'm sure they probably picked a lot of the hot spots, with LA and New York and, Florida and a lot of the places where people want to live. I would be highly, it seems obvious with that many cities, but we're going to see kind of how this all works out. But if we get another year of stimulus, one thing that is for sure is that we are going to see a hiring problem for mom and pop businesses, and we're likely going to see more and more and more inflation. What I'm seeing in Turkey that I covered earlier today is that the citizens of Turkey are so desperate to preserve their purchasing power that they are trying to buy electronics. They're trying to go to Apple, and Apple closed shop over it because they lost 22% in purchasing power just last week and 43% of purchasing power over the last year. And, when the dollar stores go into $1.25 essentially across all goods, and, General Mills that probably have, 80 or 100 brands underneath of their umbrella corporation, they're bringing up prices 20% across the board in January, and we have a hiring problem. I'm betting that things are going to get harder, and then we're going to be kind of setting ourselves up for a big, big problem. So I'm going to keep you guys up to date on it. Right now it's 12:30 in Florida. I just wanted to give you guys a quick update, and I'll catch you guys in a bit.